Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. The president's latest pause on reciprocal tariffs on dozens of countries as tomorrow's deadline becomes next month, with only a few framework deals announced. Our Megan Cassella on what to expect from our trading partners.
But they recognize they have a little bit more wiggle room now, and who knows what happens once we get to August 1st.
And Fred Kempe of the Atlantic Council on the optics and the strategy of Trump on trade.
So I think it's not him punting. I think it's him doubling down on his seriousness around tariffs.
Meta has poached another tech worker with a giant pay package, and this one led Apple's AI lab, the battle for top talent, with Wired's Lauren Goode.
I would be very surprised if this ends up being something that totally disrupts the pay scales of every engineer around the Valley. I do think it's going to be a specific group of highly specialized talent.
Plus, the rest of today's stories that got us squawking, Prime Day's start, a new version of Elon Musk's AI bot Grok, and, hey, some changes on the tarmac for the TSA.
When I'm traveling, I wear slip-ons.
Do you wear the Skechers that go on your feet automatically?
Right.
It's Tuesday, July 8th, 2025. Squawk Pod begins right now.
Stand by in 3, 2, 1. Cue, please.
Good morning. Welcome to Squawk Box here on CNBC. We're live at the NASDAQ market site in Times Square. I'm Melissa Lee alongside Joe Kernen.
Fine.
He's okay, by the way.
Fine.
I'm wondering.
It's water. I have a drinking
water
problem.
Will always do you.
I have a drinking problem. Sometimes it doesn't.
Doesn't go down?
And you are here.
Well, Becky and Andrew are off today.
But you are.
I'm keeping you
Do you
company.
know in hoops, it's people get awards, 6-man award for someone that did. You get the 6th person award for being here. It's like an honorary squawk something or other that I'm going to get for you for being always saying yes and coming in. And
is there a monetary component to this award?
There will be no money. There's no money involved. Just a lot of thanks and gratitude. And
it's always my pleasure.
And it's the cover. I mean, the Journal has about 6 stories on sort of the restart of the trade war. President Trump announcing blanket tariffs on imports from at least 14 countries yesterday. Megan Cassella joins us now with more. And with each announcement yesterday, the market got a little bit of agita. You could just see it in a stepwise fashion as more and more came out. The market went down from all-time highs, we should point out.
Absolutely, but still a drip-by-drip nature sort of yesterday, Joe. But good morning, guys. It was sort of Liberation Day, round 2 yesterday. 14 U.S. trading partners ultimately received letters from President Trump laying out the tariff rates that their exports to the United States will face beginning on August 1st, unless they strike a deal with the White House before then. They range from 25% for larger trading partners like Japan and South Korea, up to 40% on the high end for countries that included Laos and Myanmar. And for the most part, the rates either closely match or are somewhat lower than the reciprocal rates that the president announced back in April. So President Trump said in the letters that these tariffs would be separate from any tariffs already in effect, including on specific sectors, that they would be raised higher if countries retaliate, but they could also move lower if countries strike deals or lower their own tariffs. So not a ton of certainty here as to the way forward. The president was also asked late in the day whether the August 1st deadline was now firm. Here's his response.
No, I would say firm, but not 100% firm. If they call up and they say, would like to do something a different way, we're going to be open to that. But essentially, that's the way it is right now.
So not 100% firm, we'll have to see. He did sign an executive order late in the day, formally delaying for the second time the deadline for all of these so-called reciprocal tariffs to take effect, this time from July 9th to August 1st. So amid everything else and all of the headlines yesterday, guys, the new piece here is that timeline gets extended, allowing for more negotiations for a few more weeks. Guys.
Just wonder whether this puts pressure or lessens pressure on countries like India. Or today's Tuesday. There were supposed to be a couple of deals announced by tomorrow. Are you hearing
it's
any?
Interesting. We've actually seen We've seen a handful of countries responding overnight to your point about the pressure. Some of them saying there was just insufficient time to reach a deal. That's why there's more time now. Japan seeming to be one that's not bending to the increased pressure. I do think that was the purpose here, to sort of raise the stakes and say, we really mean it this time. This is the rate that you will have to pay, or the rate that all of your exports will face coming into the U.S. But Japan, for example, saying they're not going to take any easy compromises on the way out. Korea saying something similar. The national interest is still the top interest here. So while the White House is trying to increase the pressure, some of these countries we're seeing so far holding firm, but I'm sure we'll see more responses today.
But I just wonder what does India think? If there's, representative was here last week, we've heard from not just some of the president's people, but from the president himself. He mentioned India. Did he not? Would this make them likely to say, okay, we're going to give you, this is going to be a big deal for us to do this because people have been waiting for something like India?
India is an interesting one because you're right. The president again mentioned it last night, I believe, and we've heard administration officials mentioning that one for weeks now, saying that they're very close. It makes you wonder why it hasn't been announced yet. Clearly, there is some sort of a holdup on either side or maybe on both. That means they aren't announcing something yet. India was not one of the 14 that got a letter yesterday, but in the executive order, they extended the deadline for everybody. So it does mean that everybody gets a few more weeks of negotiations. You could look at this either way. I think the markets are down a little bit, reacting a little bit, but not in a huge way. I think waiting to see if this deadline really holds firm this time. Countries might be doing the same thing where they're trying to continue to work towards a deal, but they recognize they have a little bit more wiggle room now. And who knows what happens once we get to August 1st.
Right. All right. Nobody knows more probably, Megan, that we're all watching and waiting. Thank you. See you.
The Transportation Security Administration is changing its policy that requires airline passengers to remove their shoes at screening checkpoints. That's according to multiple reports that say the TSA has begun rolling back the requirement at some airports, including New York's LaGuardia, in recent days. The agency has not officially announced the change and did not confirm this new policy. The TSA has required most passengers to remove their shoes since 2006. That was nearly 5 years after a terrorist tried to detonate an explosive in his shoe while aboard an American Airlines flight from Paris to Miami. The move could diminish the value of the TSA's pre-check program, which allows travelers to keep their shoes on during screenings. Customers pay for the privilege, about $80 for 5 years of the expedited screening.
I mean, it is pretty, I've always thought it was pretty unbelievable, because if you were to add up the total number of people that have removed their shoes and all the rigmarole, for lack of a better word, that we go through, and was it only one attempt?
One guy?
Was it one attempt that someone,
right,
because you could put an explosive
you
in
can't quantify the nature of, deterring the attack.
It reminds me of Six Sigma, where in a company you're not allowed to make, out of 8 million attempts, you're allowed 0 screw-ups. And I understand all that. When I'm traveling, I wear slip-ons. Do you? Do you
wear the Skechers that go on your feet automatically?
Right. I have is it Vans or Vons? Vons is the supermarket. Vans is the I wear Vans because I don't want to be messing around. Of course,
yeah, and you don't want to delay. So delays
to this day, I should get.
Don't you have pre-check?
No, I should.
But now you don't need it apparently.
And clear, I'd like to have all those, but don't you have to get those things at the airport or something? Yeah. I can't visit the airport unless I'm going.
No, you don't visit. You just go to the airport a little bit earlier and you sign up.
I don't like that either. I don't like.
You've never been at the airport for a delay?
Like all those nice restaurants and the shopping and stuff. I feel bad for the people who have to work there.
If you're stuck there.
Yeah, if you're stuck. You'd have time
productive.
to go. You're right.
Sign up.
Right. I'm lazy. You're right. I should have done that.
Keep taking your shoes off, Joe.
Right. I know. And that's not good for anyone. Apple's top executive in charge of artificial intelligence models leaving for Meta Platforms. Meta confirmed that engineer Ruoming Pang is joining its superintelligence group. Pang had joined Apple from Alphabet in 2021. A Bloomberg report says Meta offered a package worth tens of millions of dollars per year as part of Mark Zuckerberg's hiring spree. We've heard that some packages are total $100 million or thereabouts. And I think he's been on a hiring spree. got like 11 hires over the weekend or something.
Hired a bunch of researchers from OpenAI.
Yeah.
So really going at it.
Because they're behind, I guess.
Or they want to get ahead, or they want to keep their edge.
But
it's a race for talent,
not
right?
good for
it's
Apple.
Limited pool. No. Another strike against it, potentially.
Check out the shares of Tesla. The stock fell nearly 7% yesterday after Elon Musk announced plans to form a new political party. That decline represents a loss of more than $68 billion in market cap. Separately, Elon Musk's XAI is set to release the latest version of its AI chatbot, Grok. Musk posted on X that Grok 4 would be released Wednesday at 8 p.m. Eastern Time. It says here that, helping me out a little bit, that Wednesday is tomorrow.
It usually follows
See, I knew
Tuesday.
that. I knew that. I appreciate the help, but I knew that. What do you use? Do you use it much? I use it quite a bit. You use Gemini. You do. Early on, I started, and I had problems with Perplexity. I think, they just scan Reddit boards for when you ask them a question. But it's gotten better. I think it's pretty good.
There are a lot of other functions.
What about
like
ChatGPT?
within FactSet, you can go through transcripts.
You use Grok
and ask. No, not really. I don't. The thing that I have a problem with is that I can type in something into AI and ask a question, but I will always want to confirm that answer anyway.
Yeah.
So, it helps. It points you in the right direction.
Some of it is pretty.
But I don't just
some
rely
of it's pretty
on that.
amazing, and I can't believe that they do. There is some logic involved with how it all gets put together. Other times, less so. Sometimes, if I ask a name and they give me some European soccer star versus some, corporate type.
But like Karen Finerman was telling me that she was using various AI chatbots to find out, she was putting together for a class that she teaches, like how to depict graphically an options trade. And the chatbots could not handle it. It took so many, there are definitely areas in which, these models need to be improved.
So early. It just makes you wonder about 5 years from now.
Oh, how much better it'll be.
Yeah.
Of course.
It's going to be like scary, probably. Sentient, almost.
That's your big thing.
That's my big
Singularity.
worry. I want that singularity to be great. If we can download our brain and live forever. I just don't know if that's possible. Is it?
I don't know.
That's why my backup is going to church still.
You might as well hedge your bets.
Exactly. An update now. Well, good. We need an update. I didn't know there was a garbage strike, apparently. In Philadelphia, trash has piled up throughout the city since the strike began on July 1st. Talks between city, that's all Philly needs, good God. Talks between city officials and leadership for the Municipal Workers Union were held Saturday, but no agreement was reached, and there were no talks Sunday or yesterday. Union leaders, though, yesterday told NBC they plan to submit a new proposal to meet the city and meet today for further negotiations. The union's fighting for higher wages and health care benefits for its members. Philadelphia officials have set up locations for garbage collection centers where people can bring their trash during the strike, but reports say many of those sites are now overflowing with garbage. That's always nice. Coming up, a flurry of, that's when we realize there's your primary physician,
right? Then
your garbage man.
The two most important people in your life.
When the garbage man doesn't come, yeah, I think so.
Big problem.
Big problem.
Cheese will be next.
Coming up, from Prime Day to days, Amazon's deal-a-thon is upon us. CNBC's Courtney Reagan swings by the Squawk set.
How good are the Prime Day discounts? And like usual, it's sort of hard for me to tell you that exactly.
And the delay heard round the world. The Atlantic Council CEO, Fred Kempe, on the president's tariff strategy as another date for deals with other countries approaches and is moved.
The president said this is a time for me to push and show people that I'm not Trump always chickens out, that it's not Taco Trump. It's a deadline that's set 3 weeks out.
More Squawk Pod right after this. Welcome back to Squawk Pod from CNBC, today with Joe Kernen and Melissa Lee.
Amazon Prime Days have arrived and consumers will be hunting for bargains, but will they find any? Courtney Reagan joins us now with more. Court.
Sort of the question everybody always asks, right? I mean, how good are the Prime Day discounts? And like usual, it's sort of hard for me to tell you that exactly for a variety of reasons. But this year, it's actually a little bit harder because of the possible tariff influence. Makes it murkier. But here's what we know. Amazon CEO Andy Jassy told our Jim Kramer that prices have not gone up appreciably due to tariffs going into Prime Day.
We did a lot of forward buying several months ago, and then a lot of our sellers, our third-party selling partners, forward deployed a lot of inventory to avoid some of the issues with the uncertainty around where tariffs are going to settle. And we have so far not seen prices appreciably go up. I think some of that may be, the forward buying and deployment I mentioned, but some of it is we have about 2 million sellers in our marketplace. And so even those that decide they're going to pass on whatever the tariff increase is in the form of price, there's probably going to be a number of sellers who decide they're going to take share and not increase prices.
However, several outside pricing analyses suggest that's not true for every item. Commerce IQ says an analysis of 57,000 SKUs on Amazon shows the average selling price increased 2.3% in May from April. So on average, maybe that isn't necessarily what you would call a, quote, appreciable increase. But Commerce IQ says while value brand pricing is mostly flat, so lower priced items, upper priced products show prices have increased between 5 and 15%. Now, a data weave pricing analysis of more than 1,400 items made in China sold on Amazon from January to mid-June found the median price increased on 475 items, 633 were unchanged, and 299 actually saw prices fall. Now, this is according to Reuters. Overall, the median prices did outpace inflation, increasing 2.6%, with prices increasing more sharply in May and June, particularly in home and furniture and electronics. Now, CoreSite's Deb Weinswig says Amazon typically asks sellers to offer at least 20% to participate in Prime Day. But if that's on an item with, call it a recent price increase, like we just talked about, of maybe 15%, is 20% then that great of a discount? Amazon says it's confident in its deals and its focus remains on delivering value to customers as the trade landscape may be changing. Beyond pricing inventory, though, that's another key thing we want to watch because retail experts want to know how willing and able some brands, maybe even smaller ones, are to stock inventory to fulfill Prime Day demand, particularly because they would have to do so in advance if it's something that's manufactured in a country subject to high tariffs. If it doesn't sell, they're going to get stuck with this item that cost them maybe potentially more than last year. So there's a lot of fluctuating factors going into this year's event.
So for a good to be considered part of the Prime Day event, it just has to go down in price by 20%, but it could have raised price by 20%. So in the end, up 20, down 20, you're actually higher than the original price anyway.
Exactly. That's kind of the tricky part. Now, Amazon doesn't really give like hard and fast rules when we talk to them, but generally experts say, look, you need to be about 20% to be a Prime Day product that gets sort of any featured or algorithm push. But again, to your point, if you've just recently raised price, is 20% really that good? So it's like I would tell everyone all the time, do you think the price is good? If it is, then buy it. I know that's not the most helpful advice, but it's sort of true, right?
Yeah. Target, Walmart, all of them are matching or trying to compete also. How much pressure does it put on like a Target, for instance?
Yeah. So I think obviously Amazon started this deal, the Prime Day event deal, 10 years ago. It was in 2015, and they did it to celebrate their beginning, their anniversary. That's what they say. But many retail experts say, look, they also did it to sort of jazz up shopping during an otherwise pretty quiet period, and it has worked to pull some back to school sales forward. I think other retailers, like often happens with these events, feels like, well, I can't be the only one not offering it, so everybody gloms on. And shoppers have gotten much savvier about that. I think most of us, if we're looking for something, we'll check around and make sure the deal is the best. Now, Amazon probably has the most sophisticated dynamic pricing algorithm, so I think sometimes if it is an identical item, it will be very hard to beat an Amazon price on one of these big event days, but it can happen, particularly if the item is not identical. But when you look at companies like eMarketer that study online pricing, they say Amazon still is going to take probably 75% of all U.S. online e-commerce during this 4-day event. And by the way, it's 4 days this year instead of 2.
For Target, we've recently seen the stock perk up a little bit. And so when I was asking at Target, I was just wondering what sort of pressure if they're forced to sort of cut price and offer incentives, Could that put additional pressure on margins, but, actually maybe draw people back?
Right. That's such a tricky one because I think Target in particular has really struggled with its merchandise, both with sort of the types of merchandise it has, the amount of inventory, and then how it's priced. And so, well, not at Target, at Walmart, but Doug McMillan always talks about that's sort of the key of a merchant, right? You have to figure out if you can drive more volume, then maybe you can afford to drop that price lower. But unfortunately, Target's sort of equation has not been so perfect for that more recently.
You are really fast money.
What?
Just really short term. It's a month. It's perked up. It's down from.
Well, a month.
It's down from 260.
A turnaround has to start from somewhere.
It's down from 260. It's
okay, I understand that.
Walmart's up from.
But if you bought it a month ago, you're happy with that bounce.
That's right.
Does that look like a stock that's doing a little bit better to you right there? Does that?
Well, and the longer term chart is hard to see the more recent trend, of course.
You are finding the silver lining.
I wasn't saying.
Thank goodness she's here, right?
No, I know you're not. But I heard you, and I just decided I'm going to look to see if because I knew how poorly it had been doing, and I looked to try and I see it. Teeny weeny little on the right hand side.
Okay.
Go woke, you go broke, baby. That's simple. The deadline for reciprocal tariffs has been pushed to August 1st. The Trump administration already moving ahead with steeper trade tariffs. 14 letters have gone out to notify countries of the new levies. Join us now, Fred Kempe. He's a Renaissance man. He's Atlantic Council CEO and president and a CNBC contributor. Since you are a Renaissance man, I'm surprised we didn't book you maybe to talk about peace breaking out somewhat in the Middle East and Netanyahu publicly stating that Trump should get the Nobel Prize, Nobel Peace Prize, which we know isn't worth much these days after Obama got it for absolutely nothing. But you don't want to talk about what's happening in the Middle East, Fred?
Well, look, I've been writing about what a good month, a good June Trump has had. It's not just his strikes on Iranian nuclear facilities, which has restored deterrence in the Mideast and has done and set back Iran and opened up the Mideast to a real possibility of tolerant, modernizing, moderate states coming together under the Abraham Accords and perhaps, the Saudi Arabia and Israel doing normalization. There could be a real breakthrough. And then at NATO, the allies come up to 5% defense and defense-related spending, which is huge and wouldn't have had happened without Trump. Secretary General Mark Rutte did an interview with the New York Times over the weekend where he said as much. And then, of course, the big, beautiful bill. So he had these three wins. I don't put the tariffs in the same category. I think the markets still haven't priced in their potential impact on growth, their potential impact on inflation. He's particularly going after two of our allies, Japan and South Korea, where the cost alone to the auto industry could have a real hit to the American consumer. But there's some triumphalism right now here in the White House. They say, well, April 2nd, we did Liberation Day. It hasn't been inflationary. The markets are doing fine. We've had we're having a good run on other fronts. So the president said, this is a time for me to push and show people that I'm not Trump always chickens out, that it's not Taco Trump. It's a deadline that's set 3 weeks out. Many people were hoping it would go past Labor Day. And so I think it's not him punting. I think it's him doubling down on his seriousness around tariffs. And
for those that wish, and it's weird because the same people that really hate the tariffs, Fred, are the same people that are the first to say, nani, 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 Taco Trump, you didn't do them. So they don't want them. They're horrible, but then when they don't get them, they're still not happy because it gives them another, they're going to be damned if you do and damned if you don't. But I will say for people that don't want tariffs, and I sometimes not sure how I feel, targeted is one thing. If it works, if it brings people to the table, if it rebalances global trade, I can see the rationale. But in general, free marketers probably, like comparative advantage. I understand how a lot of people do not like tariff. But now we're back to new highs in the markets. And the notion of doubling down, this would be the time that the president would think he has the leeway to do it. And that might make it dangerous because we haven't, every economic report we wait for, Fred, it's going to be this jobs number, we're going to see it. Or it's going to be this PPI or CPI number, we're going to see it. and it just hasn't materialized yet.
Well, look, Joe, the reason you don't bring me on to talk about markets is I've been historically not correct. But it sure seems to me that markets aren't pricing in what's happening right now. In November, we already said, look, Trump 2 is not going to be Trump 1. The markets still see tariffs as a negotiating ploy for a better deal. So for freer markets, I think we've got to conclude Trump does tariffs because he likes them. It's economic policy, and he's got 3 reasons other than negotiation. One of them is he wants to move manufacturing to the United States. That's going to take some time. That's a longer term play. The second is that he wants to make up revenue that he's going to lose from his big, beautiful bill and the big deficit he's building up. There's no great sign yet that this is going to bring in the hundreds of millions of dollars he expects, but it will bring in some revenue, no doubt about that, particularly as 10% seems to be now the new baseline. And then the third is punishment. If you're letting fentanyl into the United States, if you're a BRICS state and you're trying to shift to the use of the dollar, I'm going to use tariffs the way I use sanctions, but tariffs give me more room for maneuver. I can do 5%, I can do 7%, I can do 12%, while sanctions are just too hard to take on and off. And I think what the market hasn't really priced in is that tariffs are being used in all these different ways, and some of that's contradictory. You can't raise revenue from tariffs and move manufacturing to the United States at the same time. It will do one or the other. It will do something in between.
Fred, are the markets also underestimating the other side of the table? We have the U.S. side, and we think we have a lot of leverage, but there are many reasons why the other side of the table might not want to deal. Japan, for instance, the upper house election is coming up. South Korea's president just took office, a month ago. The BRICS countries met in Rio. They have banded together. You mentioned the move to de-dollarize trade, for instance. And there's a multitude of reasons why perhaps this, impasse, this trade war, whatever you want to call it, might actually be a little bit more prolonged than the August 1st deadline.
Yeah, look, they were looking at 90 deals in 90 days, and they've got 3. And so another 3 weeks, how much are they going to get done? I'm not really sure. I can't believe that any politician in South Korea and Japan is going to want the auto tariffs, which were 25% to start with. This looks like another 25% on top of that, and so you're seeing the prices fall of these major makers of cars. So the economic damage is going to be broad too. Volume of trade last year, U.S. imported about $148 billion from Japan, $131 billion from South Korea. Together, that's about 8.6% of total imports. Total imports. That's not small stuff. So, I think what's really here, and this is hard to calculate, and this is more of a geopolitical statement than a market statement, is trust. Why have people invested in U.S. Treasuries? Why have people used the dollar as a reserve currency? Partly is there's not a great replacement for it, but partly it's because there was trust in the system. There was a feeling that we were predictable. There was a feeling that our rule of law was great. And so what you're hearing now, we're hearing this from central bank governors, from finance ministers. They still say there's not a great replacement, but the difference is that they now want one. Before there was, we don't really need a replacement. The U.S. is so reliable. We can trust it so well. This is fine. Now I think you've already seen the dollar have in the first half its worst performance since the 1970s.
Yeah, but Fred,
and a lot of people think that's from trust.
Yeah. Do you think you have a problem with where the dollar is? What's the correct value for the dollar? Many firms on Wall Street said it was significantly overvalued in the last couple of years, that this is absolutely a normal, as a healthy rebalancing of global capital flows, and that it was way too strong. And Scott Bessent made that point yesterday. Are you telling me right now it reminds me of the global temperatures. What's the best global temperature for the world? Do we know that? And if it's 2/10 one way or the other, is that bad or good?
Well, look, the dollar was overvalued. There's no doubt about that. So some sell-off, I think, makes a lot of sense. But the question is a question of confidence. You don't want to lose confidence. You don't want it to go down because of confidence in the U.S.
You are so 2 months ago. This sounds like this is exactly the big fears that we were hearing. No one was going to buy our bonds. We weren't going to be the reserve currency. We weren't going to lead in the world anymore. Next thing you know, Iran is not a nuclear power or isn't likely to be anytime soon. It's just that so much has changed in the last month. These are the same concerns that we heard, and the market was at all-time highs on Thursday.
The market keeps shrugging off really large stuff, look, if traders are still making money off this, maybe they're right. And U.S. Treasuries, despite the budget bill that's going to add $3 trillion to the to the deficit,
this is like a talking point festival here. It's going to add $3 trillion because you're counting. So if we hadn't extended the tax cuts, we would have saved that $3 trillion, but the economy would go into a recession probably. So you didn't want to extend it? You didn't want to extend those?
No, look, the Wall Street Journal is really clear in its lead editorial today. Tariff Man is back for more liberation is the headline. But what it's done, it's praising the tax cuts. It's saying, look, you were on a roll, you were on an economic roll. The tax cuts were great. Why did you have to do this now? I mean, that's where they are.
No, I understand. All right. I hope next time you come on, if things are still good, you better be in a better mood and ready to talk Nobel Peace Prize. But
look, anytime you want to talk about the Renaissance show, I'm happy to go there.
You're a Renaissance man. You are. You can talk about anything. But it all seemed kind of half empty. All seemed kind of half empty, not half full, Fred. I will say that. You seem kind of half empty.
Joe, let's end there because the tectonic earthquake of the Middle East could be one of the most important moments in Middle Eastern history in centuries. It could be what happened with Europe after World War II, where these countries came together and they built institutions like the EU and NATO and had an integration as never before.
That would be good, and it could be economically great for the world, too. Fred Kempe, thank you.
Thank you.
Next on Squawk Pod, tens of millions, 100 million. Artificial intelligence's top talent is on the move for a price. Meta's hiring spree across Silicon Valley with Wired senior writer Lauren Goode.
For some of these engineers and some of these operators, the pay packages are certainly going to be an incentive. And for others, they're probably evaluating which company or which lab is the next rocket ship in AI.
This is Squawk Pod.
Stand by, Joe. His mic, cue.
You are watching Squawk Box on CNBC. I'm Joe Kernen, along with Melissa Lee. Becky and Andrew are off today. Apple AI executive Ruoming Pang has reportedly left the company for a role at Meta. This is the latest move in the ongoing tech battle for top AI talent. Joining us now, Lauren Goode, senior writer at Wired. Lauren, it's good to see you. I mean, these guys, I look at it, they're so young. They must be like off the charts, genius. If someone comes to me and says, Mr. Kernen, what should I take in college? What are these people? What are they? EE? What computer programming? Are they coders? What are they?
Well, at this point, a lot of them have probably pivoted to studying generative AI in particular. If they were machine learning or AI engineers before, now they're focused on whatever this definition of superintelligence is going to be.
Oh my God. Okay, whatever it is, I don't.
It's not too late, Joe. It's not too late for you.
Oh,
you
it is so far.
Coding now.
It is so far too late. What do you think he was making at Apple, Lauren? And the reason I say that, I mean, Tim Cook has all the financial wherewithal in the world to keep whomever he wants. Does it have anything to do with him thinking that Meta has a better shot than Apple, and it's not just the money?
That's an excellent question. I can't say for sure what the folks at, say, Apple or OpenAI were making prior to being lured away by Meta for this new superintelligence lab. But I think it's safe to say that for some of these engineers and some of these operators, the pay packages are certainly going to be an incentive. And for others, they're probably evaluating which company or which lab is the next rocket ship in AI and what the missions are and whether or not it makes sense for them at this stage in their career to join.
So reminds me of like the the dream team or something in the Olympics. They did win, but they still got to play the game. Is it a given that if he gets the best people that Meta's going to win? It's still not a given, is it?
Yeah, so the thing that researchers and technologists and executives have been saying, at least I've heard some of them say around the Valley lately, is that what's going on with generative AI right now is that it is overhyped in the short term and underhyped in the long term. And so this is all just still shaking out. It's still very early days for generative AI. And I think in a sense, people are making bets on their teams, who they want to be with, for whatever this sort of super intelligent future looks like. People have been making some of the comparisons to sports teams, saying that these sound a little bit more like locking up people in contracts or packages rather than just like your standard AI or engineering job. But it's hard to say who ultimately is going to shake out as the quote unquote winner. I think it's more realistic that there would probably be a lot of winners in this space. Right.
I wonder how many will be like top 3, top 4. I guess we know some of the players at this point. We said that it was tens of millions. We heard he was offering packages worth hundreds of millions. Then we said it was tens of millions per year. Do you know what specifically? Is it tens of millions per year?
So Wired has reported that as many as 10 people have been offered packages that are, upwards of tens of millions per year, with some as high as $300 million per year overall, including $100 million in the first year. Some of that is in bonuses, some of that is in equity, some of that is in just cash salary. We've also reported that in some cases, these employees would vest within the first year of joining the Meta Superintelligence Lab, which is sort of an accelerated vesting schedule. Meta has basically disputed some of this reporting around this that's been floating around the internet. And even Meta's own CTO has specified that this would be kind of a certain subset of engineers who receive these incredibly high pay packages. And I think that that's an important note to make in terms of what this does for hiring and AI talent in Silicon Valley in general. I would be very surprised if this ends up being something that totally disrupts the pay scales of every engineer around the Valley. I do think it's going to be a specific group of highly specialized talent, since talent is one of the most critical parts of it. And it's really talent, data, and compute power at this point that are sort of helping these companies, set up for this next era of AI. And I think it's going to be a specific subset of talent that are offered these kinds of pay packages, or counter-offered for that, for that matter, if you're OpenAI and you're trying to retain an employee.
Lauren, once upon a time, the talent pool might have grown because people might come into this country to work or to study, et cetera. And I'm wondering what you've seen in terms of how that pool has remained maybe stagnant, maybe not growing as much because of the ongoing trade wars.
That is an excellent question. And actually, I've been doing some reporting for Wired about what's been happening around high-skilled tech visas here in the United States. Right now, we're still sort of in the middle of what you might call H-1B season, where folks are getting their applications in and waiting to see whether or not they're approved for the next round of visas in the fall. We know that, the immigrant pipeline is an incredibly important pipeline for the talent pool in Silicon Valley. And we have reported that there have been some more restrictive measures and more requests for evidence or requests for additional information during the application process for these visas. But actually, at this moment, it's still a little too early to tell whether or not that's going to affect the ongoing AI race.
Is there a perception that Apple is that is still somewhat behind? And this guy had a 100-man team or 100-person team. Is this a significant setback? And what did they do? This is a really good question. Because there is a lot of emphasis right now on who's behind and who's ahead in this moment. And even in, evaluating sort of what's going on with Meta and reporting on that, there have been some criticisms of how the latest rollout or the rollout of their latest model went and how effective it is. And I think right now, you're hearing from folks, people are focused on the specific models or the specific applications and sort of the speeds and feeds of it. And those are all very valid critiques.
weeks. And certainly what's going on at Apple seems a little bit confusing for a company as big and powerful as Apple that has the resources to devote to this effort. But I do think, once again, if you sort of look at it as overhyped in the short term and potentially underhyped in the long term, it's still a long game, and Apple does have a lot of resources. It also has one of the most powerful and lucrative distribution platforms in the world with all of its iDevices. So if and when it does kind of figure out what it's going to do in AI, whether or not it's going to remain, sort of keep it private, and how it's going to distribute it, I think it still could have a pretty good chance of, in the same way that Google sort of sped up and caught up, of making an impact here with AI.
So you yourself use what? And do you have how many? And do you use different things for different models for different questions? What should I be using?
Oh, this is a good question. I use ChatGPT intermittently because it's sort of a professional obligation at this point, Joe, I would say. Not that I use it for Wired work, but just I'm constantly testing these things.
No one's saying that. No. But do you pay? Do you pay? Sorkin has one where you pay and it remembers every. See, I don't want a history of things I've.
It's sort of paying $200 per month. That's what I want to know.
On my browsers, I go to silent mode. I don't need it in memory for.
I've used Google Gemini. I use, apparently I'm using Apple AI every time Siri summarizes my iMessages, but those are sometimes hilariously off key. So I would say that those are the three that I'm sort of rotating through at this point. But there are a lot of offerings out there now, and it's a really interesting race.
And it's so early, and it just boggles the mind what it's going to be like in a couple of years. Lauren Goode from Wired, thank you.
Thank you so much.
Okay.
And that is Squawk Pod for today, this Tuesday in July. Thanks for listening. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern to get the smartest takes and analysis from our TV show right into your ears. Please follow Squawk Pod wherever you get your podcasts. Have a great day, and we'll meet you right back here tomorrow.
We are clear. Thanks, guys.